So hi everyone, I'm here with Bob Winnington today. He's the CEO of the Money Advice Liaison Group. So Bob, thanks very much for joining me today.
My pleasure. Good to see you, Chris.
Yeah, good to see you. So we were just chatting a bit about your MAL conference, which I think was on the 9th of November, and I suppose it was just trying to get a bit of observations from that. So I've actually had a lot of great feedback on it, and in terms of the content and stuff. So there's a lot of interesting stuff I think you talked through.
Smashing. Yes, we've been in existence for 36 years now. I've been with the organisation for the last 7. We've had a number of conferences, obviously 2020, as with everybody else, that didn't happen. But we moved last year for the first time outside London and held our conference at the Birmingham Repertory Theatre. And it went really well last year, and we got good feedback, particularly from the debt advice community, and particularly those people who are based further away from London, where the cost of getting in and out of London's quite prohibitive for that sector. So Birmingham worked well for us, so we returned this year, and our theme for 2023 was the new demographics of debt. We'd had feedback and various conversations at both regional and national Money Advice Liaison Group meetings about the way in which different people were handling their challenges with debt and their problems in interacting with organisations, and very wide-ranging experiences from people who are in Generation Z and using apps and certainly not talking to people or seeing people, very much working in a different way to the baby boomers, the more mature, retired people, etc., who do like that face-to-face contact. And that's massive generalizations because obviously everybody's different and everybody's an individual. But we recognise these differences, and so we decided to theme our conference around the new demographics of debt. And we had a really engaging keynote speaker called Lexi Mills, who's the CEO of an organisation called Shift 6 Studios. And Lexi set the scene really by talking in far more detail and far more eloquently than I did about the way in which different people from different generations are handling the world at large, but also particularly any challenges they may have with debt and particularly problem debt. So that we had great feedback on Lexi. She hadn't spoken at one of our events before, but certainly set the day off in the right way. And then we had our second keynote, who was Jonathan Phelan, who's the head of Department for Retail Lending Supervision at the FCA. And Jonathan spoke about the challenges around the cost of living crisis and also about consumer duty and the requirements that are imposed in terms of firms in order to meet the FCA requirements in that regard. So that set the day off, Chris, really, in terms of the two keynotes.
Yeah. And what were some of the changing demographics that are getting raised? Obviously, you've got this new younger generations coming through, maybe have this different kind of like contact preferences, but maybe also different. Are they seeing different attitudes to debt?
Very much. And in fact, one of the breakout sessions we had later in the day was focused around behavioural science and how different generations approach money management. So it's not just debt, it's about money management. And I always go to great pains and say we are the Money Advice Liaison Group, not the Debt Advice Liaison Group. In many ways, prevention's better than cure, but quite clearly the focus tends to be on people who do have problem debt and do have those challenges. But the whole approach to money management is changing as to whether it's a natural way for people to behave in terms of saving when they are younger. Do they set aside money? I think a lot are still looking to buy their own houses and their own properties, and the amount of deposit they need in today's world is very different, certainly from when I first bought my first house. But I guess it's still a percentage of the salary. It's probably a little different in terms of percentage of salary, but it seemed far more achievable 18 years ago than it does now. So I think the way in which people manage their money, the way in which they decide to save or plan for other big expenditure is quite a key element. And I think there are notable differences across the different generations in that respect.
And so do you think that's changing because, say, for example, deposits or house prices have gone up so much as an example, so just taking housing, so people have to save more than they did before? Or do you think there's a different kind of attitude towards debt in terms of we've had buy now, pay later going on in the background. That's always talked about. Are people more ready to borrow or less willing to save, or is it this just the same in every generation, which is just you're just seeing it from a different perspective, maybe with different figures?
Yeah, I don't think you can totally generalise and say one generation does X and one generation does Y. I think it does differ from individual to individual. One thing that I've spoken about on a few occasions are people's appetite to use credit cards. And my parents' generation, firstly, they were only invented, if that's the right word, in 1966. So my parents never had credit cards when they were getting their first house and everything else. They didn't really get into the use of credit cards in the way in which my generation has, for example. But I do know that in Generation Z, there is a little more resistance to using them because I think they have seen and read about the difficulties that people have run into with credit card debt. And I know my son, for example, has been very resistant to getting one. And he's the only time he got one is when he went to the USA and felt he needed to have one because it was a verification of who he was and the fact that he had some credit standing. But yeah, very resistant. I think it does go in generations around how people manage their money and how they use some of the options that are available to them. And I think buy now, pay later is a very interesting one, because in many cases that almost seems to be the first option for people to pay. And that's quite scary. I'm sure a few people went on to buy things through Black Friday, and looking on some of the websites, you can spend, I don't know, £32, and the first option is buy now, pay later over 3 months. And that's a worry in my view, that it can be so easy and so accessible. And yes, that's fine if you just buy one item for £32, but if you've gone online and you've decided that Black Friday is an opportunity to get things at a better price, and you buy multiple items in that way, there's a problem waiting to happen.
Yeah, and I suppose just going back to the younger generations, almost like shunning credit cards to a certain extent, at least early on. Do you see that in terms of people needing less advice amongst that particular age group? And I know we're talking generalities. I mean, you're absolutely right. It's different for different people, right? But just taking it as a cohort, does that result in less debt problems, or is it just being seen elsewhere? And is your fear it's going to be seen elsewhere with buy now, pay later? So it's just shifting it to a certain...
Yes, it is. It manifests itself in a different way. And I know through talking with the debt advice charities and agencies, there are a number of younger people who are coming for advice and help because they've run into difficulties. So I don't think the younger generation are immune from this at all. I think personal circumstances and their natural behaviours as well. I think that for me is a real theme around the behavioural science of debt. It's quite a key element, really, is in terms of how different people approach debt and how they think the way in which they do. Is it something that's been educated into them? Not necessarily through the education system, because money advice is very rarely on any curriculum. But it comes more from around parents, peers, other people who can influence their knowledge and understanding as to what they're doing.
I'll ask you a bit about education, whether we're doing enough to educate people from around that. And so to a certain extent, the credit card or the loan kind of awareness maybe has suppressed it, but is there enough actual fundamental education and knowledge around how to manage it and what it kind of means? And I know there's work going on in the background with the regulator, et cetera, around understandability, making sure you can understand it. But it feels like, have we done enough, and have we done enough early enough?
No, I think is the answer. I don't think we've ever done enough, and I don't think we're doing enough at the moment. I know that there's a lot of people doing some good things around this. We had a session around Generation Z at the conference, and one of the panelists we had was Leon Ward, who's the CEO from my bank. And they actually work a lot with young people and help with the education and understanding of budgets and how money works. And I know there are other initiatives that are going on elsewhere with other organisations who are trying to support that educational piece. And I've seen one or two books that have been written for youngsters. And when I say youngsters, really from age 7 onwards, trying to talk about money and savings and the philosophy that if you want to get something you really want, it doesn't fall out of a tree. You actually need to do something to save your money, whether it's your pocket money or if you've got a paper round or whatever it is. If people still have paper rounds, I don't know.
Yeah.
But I think the whole thing, your original question is, no, I don't think there is enough education. Arguably, I don't think there can ever be enough education about it, because I think it's important that people understand what they're doing, and they need help quite often, because people don't deliberately go out and say, I'm really keen to build up a big debt that I can't cope with. Nobody will do that in their right mind. People, through various circumstances, find themselves in those positions, and in many occasions, through no fault of their own. It could be the result of being made redundant, or it could be the loss of a partner or family member, or ill health, or whatever, multiple reasons why people suddenly find themselves in difficulties. But I think the whole essence that underpins being in a better place is about education and understanding what the options are and what the pitfalls are to avoid falling into problem debt in the first place. But then if that happens, how to manage your way out of it.
Yeah, I know how much work's been done in the debt advice sector, how much work's been done in a lot of the collections processes in terms of providing a lot of their education. And I suppose it feels like it's more powerful if you go even further upstream and prevent it even happening. It seems like that could be even more powerful.
Yes, yeah, totally agree. Yeah. The old adage of prevention's better than cure.
And I suppose the other kind of reflection, I suppose, is a lot of people in the collections industry are my age, on the maybe sadly on the older end of the working scale. How difficult do you think it is for the industry to understand the new people coming into the space, particularly from a generational point of view, and how important do you think that is? How fundamentally different is it? Because we tend to look at things through our own perspectives rather than necessarily the new perspective of people coming through.
I think it's important to bring younger people into the conversation. And that's what we deliberately did at the MAL conference, was to bring in some Generation Z and certainly Generation Y people onto our panels, and to get their views and their opinions on it. It's not people of our age and our level of working experience. I think it's great to hear from young people who are very much at the forefront of change. They understand the technologies far better than I do. They understand the different options. They understand the nuances. They're there. They're facing these challenges themselves, and they are discussing these type of things with their peers. And I think it's really important to bring them around the table, and that's what we did very deliberately at the conference this year.
And what were some of the priorities that demographic or that kind of group had in terms of either their lenders or their creditors, if they want to borrow money or if they want to communicate people? How's that different from what might be my perspective? I'm still in the world of probably maybe not telephone calls, but certainly in terms of app portals, those kind of things. But I'm maybe a little bit more traditional. I mean, what kind of surprised you would be, or be surprising for the audience in terms of how to think about it differently?
Oh, goodness me, that's a good question. I think there are certain ways in which communication takes place, which you and I probably don't necessarily access that type of information in Snapchat and things like that, which I've never used. I always find that's where it literally evaporates within seconds of having sent it. That makes me feel very nervous, being an ex-banker. But yeah, there are different ways in which people can interact. I think it's the use of the apps and the use of the information that some of the apps provide now. I know a lot of the banking apps have got a really good breakdown in terms of how expenditure is made through an account. The likes of Starling and Monzo have led the way, and actually a lot of the more traditional banks have had to react to the way in which they've changed the face of money management. I think there's a lot of change going on Chris, and being brutally honest, it's quite difficult for everybody to keep pace with it all because it is moving so quickly. And we had a final session at the conference around how can we take advantage of AI in the future of the debt advice community. I think there's a massive subject in itself, and I don't profess to fully understand the ramifications of it, but it is moving so quickly that we can't ignore it.
And I suppose one of the challenges of it moving so quickly is if we don't keep up is will it pop out elsewhere? Because people like fraudsters, as an example, are so much quicker, and they do seem to understand this stuff quicker than we can get it through, at least through approval committees. And so you start to see things like, I know loan sharks, as an example, has been a hot topic, but also further kind of criminal behaviour as well, I imagine. So it's on us to stay ahead of it, I would imagine.
Yeah, it is. It is, and it's a massive challenge. Going back to my banking days, I was actually a regional manager, and one of my key targets was reduction of fraud. And it was the only time in my banking career when I remember sitting around the table with representatives from other banks and actually having the conversation to try and understand what the latest frauds were and how we could collectively try and be a step ahead of the fraudster. But the reality is that the fraudster was normally one step ahead of the banks because of what you've said. The time to put in preventative measures, they'd already moved on and found another way of getting into the system, so to speak.
Yeah. And I do wonder if we're going to see the same with contact channels. You mentioned Snapchat, and we might not use Snapchat, but it does seem like that's pretty common. And I don't know if you looked at TikTok specifically. If you look at TikTok, it's so addictive. And there's a lot of debt advice. I don't know if there's a lot of debt advice actually on TikTok, but there's also a lot of lending advice or type of things on TikTok as well. It's a bit of a wild west, it feels. But it does seem like debt advisors are sort of moving with some of that. I mean, if you do a search for it, it does seem to be actually on there.
Oh, absolutely. Absolutely. And I think it's the way in which it works. Again, it won't come as any shock to you that I'm not on TikTok. But
don't go on. That's what I say. Don't go on. It's just too addictive.
No, don't worry. I have no plans. But yeah, a lot of people do use it. And again, it's about understanding all the channels and making all the channels accessible and providing information to people through all the channels. Because people will make their own personal choices as to how they want to interface.
And I suppose part of the challenge for firms, though, I imagine, is how do you manage and control all this, right? So it's almost like you can have, you might have 10 different channels you now have to monitor, social media you have to monitor, and just that requires investment to actually be on top of it and making sure you're reacting to it, making sure you're searching it. Are people making the investment they need to? Is it high enough in the priority scheme for people to actually invest in it and spend time looking at it? I suppose that's part of what you're trying to do at MALG, wasn't it, at the conference?
Well, I think so. It's down to each individual organisation to determine how they need to adapt and modify their approach to tackle these type of issues. But what I do pick up on is that one of the main growth departments in a lot of creditor organisations is the compliance department. Compliance is just so critical, not just in terms of those firms that come under the FCA regulations, but actually the compliance in order to meet the necessary conduct and activity that they need to interface with their customers. It's just so important that, for me, the customer should be at the heart of whatever any organisation does. And in order to fulfil the customer's needs, then you need to have a team of people who are making sure that the organisation is doing it in the right way.
Yeah, no, absolutely. I mean, compliance has been a huge focus for everyone. I was just having a conversation just recently around how that's almost like changing between, like, we used to be very focused, certainly in the collections and recoveries world, on credit risk and payment, loans, those kind of things. But to a certain extent, it's almost like getting aligned in some areas, almost like towards the compliance elements as well, particularly with things like consumer duty coming through.
Absolutely.
And are we becoming more of a compliance function than we are actually a collections function? And is that a good thing, I suppose?
It's about how to marry the two, really, because you can't get away from the core function and the core activity that the organisation undertakes. But it's about doing it in the right way and making sure it's in the best interest of the customer.
Yeah, I suppose certainly some of the more recent kind of regulation that comes through that is in the interest of the customer. So if the regulation's in the interest of the customer, that's a good thing as well. I think you could probably argue that as well.
Yeah, no, I wouldn't disagree with that.
So, and what about the behavioral science stuff? That's been so nudge and those kind of elements has been a bit of a hot topic. I was interested in what sort of like your debrief on that kind of situation was, or that conversation was. Are is our interaction with customers changing? Are there almost like different kind of dynamics we got to think about?
Yeah, I think so. Different, as I mentioned before, different generations seem to approach money management in different
Mm,
ways. And I think a lot of it is about how people think and feel, and whether they are, if you like, calm and measured in the way in which
mm,
they live their lives, and therefore they will look at a lot of information, they'll absorb that information, and then they will make an informed decision.
mm,
Or are their behaviors less structured
mm,
and more reactive? Do they
mm,
react to compelling adverts that encourage you to buy X, Y, or Z?
mm,
Do Are they impulse buyers who will sit there and just sit on their phone or
mm,
their iPad or whatever their device is and just jump from one thing to another and just have a mad half hour?
mm,
And there's everything in between as well. And I mentioned Black Friday before. How do people react to that? Are
mm,
people sucked into the whole deal, which seems to be pushed forward by organisations? Or do they view it as being, this is too good to be true? Do I
mm,
really need this? Is this something that will add value to what I want? Is it something that I need to buy? And I
mm,
think that sort of behavioural science, what makes people go one way or another, is absolutely fascinating. And I know that discussion was very interesting. In my role, there were 3 breakout sessions running concurrently, and I was hopping from one
you're
to
hopping
another.
between
So
all of them, yeah.
trying to get bites of each. And I know that particular breakout room was filled to capacity because
Yeah.
people wanted to hear about it and they wanted to get some insight into that.
What's your sense on the outlook for the future in terms of, I mean, particularly in terms of arrears levels or debt load, those kind of things? You talked about it from a generational point of view, but just generally the sense that you're getting. Where do you think we sit going forward from here? Because the arrears levels really hadn't come through, and yet you
Mm.
hear people saying rushing out to buy new things, and it feels like debt levels are increasing, and that's, I suppose, a bit of a concern from my perspective, at least, anyway, in terms of whether we're running into a problem potentially.
As Chris, there are different forms of debt.
Hmm.
Somebody who just has a mortgage has a debt. But
Hmm.
if they're managing that and they're not borrowing any other money, then you wouldn't necessarily term that as a problem debt. There
Hmm.
are others who, unfortunately, through the very circumstances I mentioned earlier, find themselves in problem debt,
Hmm.
sometimes through no fault of their own. But the real challenge is how they are facing that
Hmm.
position that they're in, and what advice, guidance, help that they're getting. The Debt Advice charities are doing a fabulous job in terms of supporting them. Each time I visit one of the charities or I go along to meetings involving them, I can't help but feel they are doing absolutely everything within their power to support people and to help people. But there is always the issue of people helping themselves.
Yeah.
And it's recognizing that there's a problem and seeking that help, and then having sought the help, actually then managing it in the right way. There are various things that I think we haven't seen the real impact from yet. And the one that hits me between the eyes, as far as that's concerned, is mortgages. People who are on fixed rate mortgages, obviously the rates have been increasing and continue in recent times at high levels. And people who are still in their fixed mortgage that they might have
Hmm.
fixed 3-5 years ago will have a shock when that fixed mortgage runs off and they need to refix or reevaluate what they're going to do. So I think there is an element of, we haven't seen the true impact of the mortgage rate rises yet.
Hmm.
I think that is something that will permeate through over, and having listened to various economists talking about it, literally the next 2, 3, 4 years. I don't think it's going to be in the next 12 months in isolation. So that's something that I think will have a real impact. And I think it's just then about what else will change in the market. The energy price rises. Some people are still reeling on the back of that, but it's probably just stabilised a little bit, albeit there's going to be a small rise, well, for some people, not so small rise in January. So I think people are just very aware of the impact. There's a lot of articles in the papers, online, television, talking about the cost of living crisis, the energy crisis, the mortgage impact. I think the profile is there. It's how people react to it.
Yeah, it does feel like it's almost like this creeping increase of people, increasingly getting into financial difficulty. It's happening slowly rather than there being like a sudden shock, so like an economic shock, because we don't necessarily see it as much in terms of employment rate as an example, which is a shock that people can't control, and then you have a loss of income, etc. It's more like this creeping, which is harder to manage or identify to a certain extent.
Yes, it is. Yeah, it is. For example, it will only have a real impact for some people when their fixed mortgage runs off and they are faced with potentially £1,000 a month increase in their mortgage as one line in their budget. That will have a notable impact for those people.
And I suppose lastly, any thoughts around things like, as that starts to increase, you get into more and more sort of like negative disposable income when you're doing budgeting and those kind of things, and it does feel like there's the tools to do a lot with that can be more limited. Any thoughts or movement around that in terms of extra things that we need to do? I know income maximization always comes up as an example, but
I was just going to say that, Chris, actually, because the last 2 years at the MAL conference, we actually had breakout sessions around deficit budgets, and they were always well attended, and there were lots of discussions that went on both within the context of the breakout session, but actually afterwards as well, which is equally important. This year, we turned it on its head a little bit, and we had a session around income maximisation, which is almost the flip of the same coin, to say there are substantial amounts of benefits that are not claimed by people who can justifiably claim them. And without knowing the full detail behind it, a lot of those people will have financial challenges and difficulties as well. And the ability to be aware of the benefits that are available to them, and secondly, to claim them, will put them in a better financial position. So that we decided to tackle it in that way. Obviously, Lee Healy from Income Max is very knowledgeable and experienced and led that session. But we also had Devon Gabani from Policy in Practice, who was part of the panel that we had for that session, along with, and again, it verifies what I was talking before, Ren Hoy, who is the founder and CEO of Lightning Reach, who is young and has a different approach and is making some waves in that sector. So it was a good discussion with Jessica Taplin from the British Gas Energy Trust and Anna Buckle from Pay Captain. So it was a really interesting discussion around income maximisation and how we can approach it in a different way.
Yeah, it's a kind of fascinating area. It's fascinating to see how things are changing, and I think it's important for us to stay up to date on it. But just in terms of like your conference, etc., just making sure we're staying ahead of what's actually changing and making sure that we keep up with the change to make sure that we can help people as much as possible. So
absolutely.
Well, Bob, thanks very much for the insights. I really appreciate you joining me. It was fascinating. It sounds like you had a great conference, and certainly I hope it was a lot of help for people.
Yeah, absolutely. We had the highest attendance we've ever had, Chris. We had 220 fantastic people there, and our challenge next year, and we're already thinking about next year, is do we need to look at an alternative location where we can accommodate more people, because we've almost reached saturation point at that particular venue. So our thoughts are turning to next year already. We have 4 national members meetings already lined up. 2 will be face, 2 will be virtual, to meet the needs of our membership. And 2024 should be an interesting but equally challenging year ahead.
Thanks very much, Bob. I know you're we're battling on time against the tides, as it sounds, in terms of making sure that you can get to your next meetings. So I really appreciate you making the time for me.
No, my pleasure. Good to see you, Chris.
Thanks very much.